Right, class, we're going to try this example in your notes in page 35. Okay, the requirement basically is to work out the tax liability. So this example will let us see the treatment of rental according to the public ruling. Like I say, Disney Sundram Berhad with 31st December year-end acquires a bungalow and a commercial complex which are all let out during the year. Now the bungalow is acquired on 1st of April. Now you just bought the bungalow this year. Now Disney advertised letting on 1st May. Bungalow is available for occupation on 1st June. And the tenant is found on 1st July. And the term of the rental agreement requires them to settle 12 months rental in advance. The rental is 3,000. Now they did not mention issues about maintenance and support. Then we have to take this rental as 4D. So the first field information is testing us on the commencement date. And the rule about commencement date on 4D is when the property is first let out. So this will be the commencement date. Follow not? So any expenses before 1st July will not be able to claim deduction. Now, but there's another issues that affect us over here. It's the issues that they collect rental in advance. And if you notice that there's this one thing in public ruling, that if you've collected advance rental, expenses that relate to the advance rental must also be allowed in the year of assessment that it is assessed. So the ruling clearly said that you have to go and make an amended assessment. But of course here, we're going to factor in, okay? Because in the question, we know exactly what's going to happen. Now they tell us that the legal fee to prepare and execute agreement. Now this is first time. So it's an initial expenditure which will not get a deduction. Advertisement, same thing, is also an initial expenditure, will not get deduction because this is the first time you let out this property. See, the quick rent assessment is told that it's 2,400 a year, and the fire insurance is 900 a year. So that's where you're going to apportion later the amount for 2012 as well as the amount for 2013. Now this commercial complex, see, Disney lets out the commercial complex with maintenance and support. So the rental is assessed as 4A. Now the complex is first advertised for letting on 1st April 2012 when it is available to be occupied. So first lets out on 1st April when it's available to be occupied. So you have to take this as the commencement date. Now the fact that you've not got the tenant, it doesn't matter, okay? So that's the rule for 4A. You just refer back to the notes. You can see the rule about commencement date, yeah, okay? So the tenant is only found on 1st of June, no issue. Now Disney received 210,000 rental, 90,000 deposit. That's not an income, okay? So it's subject to refund. You don't tax this. And now they've given us the interest, which is per annum. So 170,000, and then repair maintenance is incurred in the month of May. Now the commencement date is April, so you can claim this. Quick rent assessments per annum, so you have to apportion fire insurance plus rental collection expenses. Now the capital allowance, since this is 4A, so they tell you capital allowance for this complex is 18,000. You're going to claim that. Now Disney has a trading business where it has an adjusted income of 150, CA of 22, unabsorbed business loss. So this is to show how you're going to position your figures in the tax com. And they have also made a 30,000 donation on the 15th of September, right? So we just show you the numbers. Disney Taxcom for 2012. Right, you got to begin off with business source, so 4A, and we have two businesses over here. One is the actual trading business, and the other one is your rental that is deemed as business source. So the trading business, right? You've been told the adjusted income is 150,000. Right, that's the figure. And the capital allowance 22. Right, friend, this will give us statutory income 128,000. Alright, we will move on to the commercial complex. So the rental that is treated as business source for the commercial complex. So it's a matter of reference. You know that the commencement date will be from 1st of April till the end of the year. Alright? Okay, so you've been given that the rental is 210. Right, the deposit is not an income, so I'm going to leave this out, nil. And we have loan interest, which is 170 for the whole year. So please, you must remember that you have to apportion. So this is April till December, so there will be 9, 12. Alright? That's 127,500. Okay, we have the repair and maintenance. Now the repair and maintenance incurred in the month of May, which is already commenced, so you can get a deduction. Right, then we have quick rent assessment, so same thing, quick rent assessment 12,000, and you apportion 12,000, so it's 9k. Right, we have the fire insurance, which is 7,000, and same thing, so portion into 9, 12. That will give us 5250. Right, the rental collection, well obviously this must be expenses incurred after you commence, right? Or else there's no rental to collect, agree? So this will be the expenses. Alright, so the adjusted income will come to, I'm sure, 17250. And you've been told that the capital allowance is 18,000. So the absorb will just be 17250. Right, there's no statutory income from this rental, so the CA carry forward 750. Right, this is just a small note for us. Okay, so finish off with the two businesses. So business and the rental business, we have the aggregate business statutory income 128. Remember, what you're going to do here is to claim the unabsorbed business loss. So you're going to minus unabsorbed business loss brought forward, and that loss is given as 24,000. So this is your net aggregate business statutory income 104. Right, so we finish off with the commercial complex. So now we're going to move on with your bungalow. Okay, so the bungalow will be rental source under 4D. Okay, so I'm going to show next page, 4D rental. I've got no more space here to show clearly to you how I derived that figure. Now, the commencement date is July till end of the year, and investment source is assessed on receipt basis. So you've collected the rental for 2012, which is 6 months times 3. And not forgetting, you're gonna have the advance rental received, the same 6 month, 18,000, 36. Alright, my legal fee, nil. Advertisement, nil. Again, reason initial, so it's capital in nature. Follow? Initial, capital in nature. Right, for the quick rent and assessment, I'm going to show you in this way. So the quick rent and assessment for 2012. Now you're going to claim 6 months of that quick rent assessment because of your commencement date, and you're going to claim another 6 months because of the advance rental. Follow? So you got to match it. Okay, you got to match it. So 1002, 1002. Right, you believe that, I believe you know what to do for fire insurance. So your fire insurance, same thing for 2012, fire insurance for 2013. So the 6 months of that fire insurance for 2012 and the 6 months of fire insurance due to the advance rental, 4545. Right, friends, so that's it. So we got all that figures presented here. So that rental, it's having an adjusted statutory income of 32,007. Alright, and these will be added up with my 104. We have 136,700, and what is that? That's the aggregate. And what do you do going after aggregate? Now you're going to minus two things, so just get it a habit, okay? So to always remind yourself that the first thing is the current year business loss. If you do have it, then you're going to claim here, but we don't see a loss in this case, so not in this case. And then the approved donation. So these are the two most common things that we normally will get for the adjustment. Okay, so the approved donation, as a company, you allow maximum, oops, got a mistake here, maximum 10% of your aggregate, and you've been told that donation is 30,000, so we got to restrict to 13670. Right, total chargeable income. Okay. Alright, the size of the company is not told, but we just make an assumption. Okay, so we can just assume that this is not a small company. So tax rate will be 25%. Right, so guys, here we go. So the tax is this TP. Alright. Okay, so basically that's the answer to part A, the tax liability. Right, the treatment, I've explained that in the class. You can just refer back to your notes. Anything not clear, you can always come to me, check with me your answer. Alright, thank you very much. Thanks for watching. Thanks for studying. Take care. Goodbye. And Mr. Lau. Bye-bye.